The biggest and longest volatility contraction on the 5-day time frame is now officially starting to expand. Mathematically speaking, mean reversions happen from critical contractive levels or inversely critically expanded zones too. We have some confluent targets we must talk about now. Welcome back to the channel on this sunny Sunday. This is ARCa, and let's dive into AMC. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at AMC here on the 5-day chart. Number one, I want to just go ahead and show you here the stochastic momentum indicator on the 5-day time frame. Please take a look at our current position right up in here, right? Let's just go ahead and focus on this arrow right here, right? Take a look at that and focus on this arrow right back over here too, right? So if you haven't noticed this just yet, that arrow is pointing to where stochastic momentum was presently shifting towards an upside, just like it is here at present day, just about January 2021, where price action bottomed out at around that area of I mean, I think it was what, around $3-4 around there. I think it was maybe oh, actually, I think it may have been around $7. Remember, this thing has gone through a split, so the price is a little bit different. But nonetheless, the asset came in from a single digit and jumped all the way to the $25 valuation, making it the first gamma squeeze that AMC experienced before the famous June run to $69, right? So yes, we are presently sitting right at that area where stochastic momentum was at that prior instance, right? Now, the next thing that I wanted to kind of focus in on here is the inverse of volatility, right? So take a look at this. Volatility during this moment here, we were in critical expansion. That means that already max buying and shorting was completely at its max, right? At the present moment. Now, here today, we are noticing here that no one is buying or shorting at all at this point here. And I mean, look at this. We are now starting an official expansion phase right here. And we are now getting moving average and the volatility component with a pivot towards the upside, indicating interest in the stock. That means that people are now purchasing this very bottom side. So when volatility in linear is displaying this blue contractive zone here, that means that we're critically contracted, right? That means that no action is happening. So now look at this. Historically speaking here, this is the largest iteration since the beginning of trading here for the AMC asset that the asset has ever had to experience here. Yes, we have now reached historic lows of volatility on that 5-day time frame, and this usually indicates a massive mean reversion, right? So that mean reversion can be several different targets. Specifically speaking, on the 5-day time frame, there are some very, very confluent targets that we can go over, right? But yes, the bigger the contractive phase, the bigger the expansive move can be, right? And I will say, right, that because of this contraction, the mean reversion, yes, it could be very tight, which means that the mean reversion could be not too far away from the present price. So if you take a look at my algorithm right over here at the mean, right, this is your Bollinger Band mean, that is sitting at about $4.83. So that's already close to a $5 target. If you would like to see this here in physical format, then let's just go ahead and take a look at it like this, right? These are your Bollinger Bands, and well, my script is displaying here the Bollinger Bands in a different way, right? So we have 2 standard deviations down, 1 standard deviation. We have the mean, 1 standard deviation up, and 2 standard deviations up, right? So yeah, take a look at it here. $4.83 located right at this place right there, right? Okay, now what's interesting too is that if I take you over to this side of the analysis, you're going to notice here that there is a massive amount of open interest change added to the $5 strikes this is for the October 25th expiries at the calls, right? We also have added added open interest change at the November 8th expiries too, and also at the December 20th 2024 this year, right? So yes, lots of people adding towards that $5 strike on the call side, right? So why don't we just go ahead and take a look at the open interest on the matrix now and see what that kind of looks like, right? So check this out. So yeah, the $5 strike right over here, looking like we have, yeah, there's a lot more puts on this side than anything, right? But yes, we are now adding to the numbers of calls, which is very, very interesting, right? And yeah, right here, look at this. January 17th, 2025, we have 15,300 to 2,000 puts. Very nice. And yeah, the November 8th, I guess this is something we can take a look at right over here, right? November 8th. Yeah, there we go. So we have the $5 strikes of 6,470 to 825. Very, very interesting times. And yes, people are also adding to the $4.50 strikes. Right now, we're sitting at $4.36. And we have here 16,000 open interest to 1,390 on the options flow, right? So yeah, things are looking pretty good. Another reason that there could be a continuation to the upside is one that we've mentioned here before, team, okay? So the reason, first of all, guys, the reason this can happen is because of reversions, right? So I'm going to talk about this. Let's talk about, I'm going to give you the percentages, these statistics, right? So 60 to 70% of the time, you'll get a 30 to 50% prior bar retrace, right? So 5-month candle variety here. And you can see that this 5-month candle is this big here. So let's just go ahead and measure that 5-month candle. Where is its 50%? Check it out. The 50% of this bar here is located at 490. Very interesting times here, right? So everything is kind of rhyming within the areas of around 483 to $5. Very cool. Now, another time, and this has 11 days to close, right? That's the only reason I'm telling you that's that this is set for its decompression levels, is that's typically what happens. As the candle closure approaches, but the closer it approaches, the higher the likelihood it is that it's going to retrace back to its 50%. And look at this, the prior 5-month candle, we're already above the closing valuation, turning that into a support. Very freaking cool. Okay, let's go ahead and take a look at the next closure here. So the bi-monthly candle is also closing. Check it out. This is the size of the bi-monthly. Let's go ahead and take a measurement from that bi-monthly candle as well, okay? So right there, nice. That's giving us a target of around $4.55 on a bi-monthly, and the monthly is also closing in 11 days too. And this is already mean reverted, right? So great. Now, if it does come back down, sure, that means that we do have some support in the immediate short-term time frame, all the way down to here, around $4.32. But of course, we're looking at this in a very macro scale here, and everything is good, right? But the last few days here for AMC, they have been pretty interesting, and there is current upside happening right now. So the immediate short-term time frame, we definitely have a massive volatility spike here with upside continuation. That means that we may be able to get a little bit of a pullback before we experience a continuation to the upside. Super strong 4-hour volatility signal as well. 6-hour time frame, massive break of volatility expansion with upside bias. Oh my goodness. The 8-hour time frame is now officially starting to expand. We have a big upside bias on that. 12-hour time frame is starting to curve just a little bit, but it's still upside with volatility expansion. And your daily time frame is getting ready for its push to the upside with a massive upside volatility spike. Okay, so if that is the case, then we just got a weekly closure, then that could tell us here that we could be getting a prior bar retrace back to its 50%, right? Well, let's just go ahead and see what that 50% retrace would be on the weekly bar. So if the weekly bar doesn't really continue, I mean, it's already closed, so it's not going to continue. So if it does come down and draw down to 50%, the 50% is saying that it would draw down to $4.24, which is equivalent to the bi-monthly retrace. Cool. But there are a couple things that can stop the price action from continuing. If it were up to me, I would just go ahead and say that price action would stop at this weekly bar's low at around 429. So let's just go ahead and keep that zone there for us, 429, right? Just like this. And I would say that the bottom side would be its physical 50%, which would take us roughly at about $4.24, right? So this is where I'm expecting price action to kind of dip into the beginning of this coming week. Okay, guys. So please remember, team, I really want you guys to join the ARCa Bulls trading team. And I will say that it's not too late to join the the ArcMasters trading course for beginners, right? So I'm doing charting and trading mentorship here for the beginners. So I would like for you to hit me up on that and make sure to make yourself a part of that as well. Okay, so ArcMastersCourse at gmail.com, as it is happening right now, team. It's just at the beginning. It's not too late. Let's just go ahead and get you enrolled, right? Very good stuff. The bi-weekly time frame also closed. So that means that we could retrace the 50%. I got to say, this one too, this has a 50% very, very similar zone at 424. Due to the prior bar being at that wick low, I got to say 429 to 424, 429 being the higher likelihood. But I do expect this thing to continue running towards the upside, okay, at least into the areas of about 441. If it does show a lot of volatility, I got to say 441 to about 443, okay, you guys, I'm going to leave it right there. The 443, trust me when I say it's not a random target, okay? 441 to about 443, right? Being the low of this gap right over here and the low of this inflection zone right there. Okay, so this is the resistance that I'm expecting here. Entry criteria could be found down at this level here, right? Down at these levels, 424 to 429 to a pump, potentially to 441 to 444. Seeing that the asset has about a 16-cent average true range, yeah, that makes a lot of sense to me. All right, guys, so I think this is a pretty good place to leave off. Please give me a shout at the ArcMastersCourse at gmail.com so I can get you enrolled in your class, right? Make sure to put your education first, okay, team? Thank you so much, and we will talk very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day. And I will catch you at the bell on Monday. Adios. Let's get it.